I don't know who's going to show up live, but we can record it afterwards. It's kind of cool to do these things live. Hey guys, we're starting an impromptu session with Bill Barhydt from Abra, and Bill is somebody I've known for a while. Bill's well known in the Bitcoin and crypto community. I don't know when you bought your first Bitcoin, but it's we'll hear that now. It's been a while, right? You've been very active for a very long time.
Yeah, I've been involved in the Bitcoin crypto community since more or less you could be. Very different perspective when I started. You know, it was really very focused on payments and money transfer and other applications of Bitcoin,
Right.
as kind of outlined in the original white paper. But you know, obviously, as Bitcoin has evolved and the payment features have kind of not only waned, but you know, kind of been you know, delayed a little bit. We've focused very heavily on, you know, banking and investing applications around Bitcoin and crypto. But yeah, I've been doing this for, you know, 12 years now.
Okay, 12 years. And before that, I know you were on Wall Street. So, and also, I believe Netscape, is that correct?
Yes. Yeah. So I worked on security and digital certificate infrastructure and other projects, but probably, you know, digital certs related to SSL was probably the most well-known thing that I worked on in order to be able to take credit cards and have international websites be able to connect securely to the browser was a big part of my early focus. I studied information security, cryptography, and you know, did a lot of work in that area before my Netscape days. And so I have a interesting, weird mix of capital markets because I worked in fixed income at Goldman, but also have a background in cryptography. So for me, Bitcoin was like, wow, finally, I finally get to do everything I love,
right,
in one job potentially. And of course that became Abra.
Okay. So tell us a little bit, not everybody who's on my kind of current following is all Bitcoiners, hardcore Bitcoiners, I would say, for the most part. They may not be aware of Abra. Why don't you tell them a little bit about what Abra is and kind of how the size of it, and you know, how many people, users, etc.
Yeah. So Abra has two lines of business. We are a prime broker in the crypto space. We service institutions, miners, hedge funds, ATM networks that are selling Bitcoin, help them replenish. We help miners with auto liquidations. We help miners with lending, derivatives, hedging, basically everything a prime, you know, trading desk would do, you know, OTC trading, et cetera, et cetera. Then we have a wealth management platform. The wealth management platform is an SEC registered investment advisor. We offer separately managed accounts for retail investors, generally high net worth. It can be anyone, but we're more focused on high net worth investors, and we're managing about $500 million in different accounts today. That's way down because we had a retail business that we wound down that was app based in the US, and so we're not doing that app anymore. And we're now converting those users into the wealth advisory. So I suspect we'll be back into the billion or billions by the end of the year. Not necessarily a prediction, but well, kind of a prediction, just given how things are going. And
so that wealth management business is what's sort of the model there?
Yeah, so it's very simple. It's each user gets their own vault, which in legal terms is a separately managed account. The beauty of that is you retain title to your assets. So what that means in English is when you think about what happened with Celsius, BlockFi, Voyager, FTX, all the other companies that failed, the users were a liability on their balance sheets. And so when they failed, you had to fight with the bankruptcy court to get your assets back. Right. And that's what's happening now with Genesis and Gemini and obviously Celsius, et cetera, et cetera. With the model that Abra is pursuing now, you are not a liability on our balance sheet. So if Abra goes away, you still retain title to your assets because your assets are sitting effectively in your own vault legally. Now,
where's that physically, that vault?
Yeah. So we basically have partnered with Fireblocks to build an SMA platform, right, that meets the qualified custodian rules as they exist today from the SEC on top of Fireblocks. And from within that platform, you can get your own vault that would hold your Bitcoin or your other assets. And you can simply hold the Bitcoin, or you can earn yield on it. You can borrow against it, which is one of the most common requests these days. As the price is increasing, users don't want to sell their Bitcoin, but they would like to access some of the gains. So the ability to borrow against the Bitcoin is a very common request and refrain these days. And we have, and then other crypto assets are supported as well. And they can do the same thing with those assets as they can with Bitcoin. But the vast majority of our users are using Abra for Bitcoin holdings.
Okay. So let's say I have 10 Bitcoin just as a,
Yep.
as a thing. And I say, great, I'm going to give my 10 Bitcoin to you.
Yep.
Now I'm allowed to borrow half of that, or how much
Yeah.
can I borrow?
So the borrowing generally, well, technically you can borrow up to like 80%. We would strongly discourage you from doing that as a fiduciary advisor. The reason being you're highly likely to get liquidated on a pullback in the price of Bitcoin, because when the price pulls back, your LTV can approach 82, 83, 85%. That's the point at which you'll automatically get liquidated, or at least part of your Bitcoin will be, in order to put you back in compliance with the loan. So we generally recommend to our clients that they don't go above 50% LTV when they're borrowing. And we help them manage that process, and we inform them if they're running afoul of their kind of LTV requirements. And we have people that will borrow anywhere from a 10% to 50% LTV in general. And LTV stands for loan to value, meaning what percentage of the value of the Bitcoin are they borrowing in dollars? That's what loan to value.
And then how does the liquidation process, let's look at the worst possible case. How does the liquidation process work?
Sure. So let's say that you've borrowed, let's make it really simple. So let's say you borrowed at a 70% LTV, even though we've suggested that you not do that. Okay. That doesn't happen generally because people listen to us. But let's say you did that, and then the price of Bitcoin fell 20%. And if you don't put more Bitcoin into the collateral, or more margin into the collateral, you're going to get liquidated. And enough of the Bitcoin will automatically be sold, right, to pay back the principal in order to bring your loan to value ratio down below the threshold. Okay.
And
So
is that margin requirement sort of something that could happen intraday?
It can happen in real time, 24/7.
In real time. Okay.
That's why we recommend to clients that they have a nice cushion given the volatility of the underlying asset, which is Bitcoin. Now, the beauty of this model, right? You're focusing on the liquidation, which is a very important question. The beauty of this model is you're holding an appreciating asset, and you're borrowing in a depreciating asset, which is what you want, right? It's common sense. The dollar, of course, being the depreciating asset. But I would posit that for the next 5 to 10 years, the volatility for Bitcoin, and this is a little bit of a prediction, but will likely decrease over time. But it's still a 50, 60 vol asset. And what that means in English is you're going to have these pullbacks on the way to Valhalla, right? So if you don't plan for that when you're lending, you're going to get liquidated. And that's why we recommend to users that they maintain this kind of 50% LTV is kind of the upper end of the safe zone.
I'm just curious if you've thought of this, or if other people have. Is there anybody who's thought of something where you have let's just say a 24-hour or a 1-week period to add more margin before getting liquidated? I mean, I think
We do that.
Oh, you do that?
Yeah. So if we see that there's a pullback and users are kind of approaching that zone, we tell them immediately, you need to consider adding more margin or more collateral to your to your system. And so that is something that our team does as a service for our users.
Okay, so somebody's asking here, this is, I think, a pretty good question. What if the Bitcoin price goes up 3x? Is there some kind of auto return of collateral? Is there something like that?
That's a great question. Now, with our old service, which we have stopped offering to new users, that was negotiated. Each loan was negotiated with the individual user, and they weren't automatically entitled to a return of collateral to adjust. There's two ways to look at it, right? One, can I simply pull more dollars out, right? Or can I actually get collateral back? Now, with the new model, where each user gets their own vault, And I love that his name is Billy Hodel, by the way.
Nice.
With the new model, yes, not only can you pull collateral out
Okay.
to get the LTV back to 50% if the price goes up, you could also pull more dollars out. As a matter of fact, with the new model, if the price is going up quickly, a lot of our clients wouldn't even pay back the loan. They would just roll the interest over to principal, and the LTV would go up slowly as the
Right.
price would be going up quickly,
Right.
as High Billy Hodel was implying with his question.
Right. Now, I got a question. You're like me, an ex, from a ways back now, an ex Wall Street guy. How excited are you about these ETFs? Because I kind of feel like there's a very limited number of people like you and me who've been on both sides
Yeah,
of the street.
I'm going to give you a very straightforward answer.
Yeah.
I think that our SMA model, separately managed account model, is the single best way that I've discovered to allow people who aren't technical to
Yeah.
hold Bitcoin, borrow against it, earn yield.
Okay.
That is not going to happen with the average consumer buying or a retail investor buying an ETF.
Okay.
I think the ETFs are wonderful for Abra because of the marketing value that they represent. Institutions and treasuries are onboarding to Abra right now because they want to earn yield on the Bitcoin. They want to borrow
Do
against the
you see
Bitcoin.
these ETFs as kind of like a marketing?
100%.
This is driving an enormous awareness, right,
Absolutely. Other
among
than
kind
that,
of
I'm not interested.
ordinary investors.
I might be interested in some options, programs once the SEC approves that, because we have
Right.
a prime desk that can help clients take advantage of those options for either hedging, miners, yield, whatever. But
Okay.
but other than that, and the marketing value, I just don't care.
Okay.
And so I think that it's great that the inflows are happening. I was with Hunter. We were pitching RIAs together from Bitwise
Okay.
and an offsite a couple of days ago, and I'm as I told him, Hunter, I couldn't be happier for you and your tenacity and persistence in getting these
Right.
things live and being such a great steward of the space. But for my business,
Right.
it's not relevant, other than the marketing value.
Right. For the marketing value. Yeah. Well, what about for Bitcoin itself? Just
I
for the
mean,
price of Bitcoin itself? Like,
long term, it's not going to matter. Look,
okay.
long term, this is about network effects, and you talk about the power
Yeah.
law. I've seen some of your
Yeah.
tweets there.
Yeah.
It doesn't matter.
Right. No,
It
I
just
agree.
doesn't matter. And
I mean,
it's
yeah, I agree.
yeah, it's very hard for people who are in the middle of this to explain it. But when you really understand network effects, none of this stuff matters. And when you're dealing with exponential growth, people get caught up in this pullback or that pullback. And my favorite thing to do is the ultimate e-commerce exponential effect stock of the last 25 years was Amazon. And I show them an Amazon chart and a log chart, and I zoom in at various points in time. And it looks ugly at multiple various points in time. And you zoom out enough, it just looks like a straight line to the moon. Right. And that's what a power law does for you. And that's what the network effects
Yeah.
combined with, Metcalfe's law do for you. That's why, again, look at Facebook, right? Many of us remember before Facebook went public, it seemed like every other week they were raising money at an astronomically higher valuation. It was the public being stupid? No, because as they were adding more users to the network, the value was going up exponentially. And that's the way network effects work. And that's what's driving Bitcoin's price long term. And by long term, I mean longer than a 1 year period in this particular, to your question, right? So it's great that we have the short term bounce, we have the short term marketing, but long term, it's not going to matter.
Do you believe in these Bitcoin cycles? Do you believe in the halvening cycle? A lot of people have asked me, does the halvening still matter?
I don't know that it ever mattered in terms of, is it why the Bitcoin price is 60K today versus this versus that? Again, probably marketing to some
Okay.
degree. I think when I zoom out again, my answer is exactly the same to you as it was before.
Okay.
And you have a power law with network effects with a deflationary asset whose supply is deflationary effectively forever. So that's what matters to me. I love the marketing of the halving. We talk about it with our clients because they should know that there's going to be increased Google searches and all these other things that are interesting. But
Mhm.
you know,
So for
I'll
your
just
managed accounts, when you demand, are you are you timing allocation to Bitcoin? Like how much Bitcoin to have as a percentage? So
No,
what
no.
what are you what
Our
are you doing?
clients are in this for the long term. They tend to be more libertarian leaning. They understand where
Okay.
this is going. They've read The Fourth Turning. They've
Okay.
read Dalio's book.
Right.
And so they get it. They think that this money printing is evil. They think we're in a late stage debt cycle. So we don't have to spend a lot of time with our clients explaining the macroeconomic situation that the United States and the world is in right now,
Okay.
with the dollar hegemony basically, heading towards a cliff. And so it's more like, okay, I get where Bitcoin is going. What are the legal risks in the short term? Do I think about hedging myself if I feel like, interest rates are going to spike? We'll have those discussions with clients. But more than likely these days, it's like I have my convictions, and I don't want to sell. This is, long-term conviction for me. I may want to borrow in the depreciating asset at some point.
Okay, so maybe I didn't understand it, but so are you making sort of portfolio decisions for them or no?
We make recommendations as a
Okay.
fiduciary, but generally our clients tell us what they want.
Okay. So and these guys are generally pretty much they're fully invested in
Yeah,
would you
most of our clients are moving Bitcoin into Abra, right?
okay,
People
right.
already have
Okay.
it. They want to borrow, they want yield, they want the vault. They
Okay.
don't want to be a liability on Coinbase's balance sheet just because
Right.
I like Coinbase in terms of what they've done, but if
Right.
you're not a trader, do not leave Bitcoin on an exchange.
Right.
There's no point. There's only downside. You're
Okay.
going to trade, which is stupid. You're going to, lose your key, which is stupid, or your YubiKey or whatever, even if you have 2FA, and then you're going to have a
Right.
nightmare.
Okay.
And, this is the best solution I've seen that comes closest to not your keys, not your coins, that still gives you the ability to transact. Because one, the SEC has audit rights over Abra. Two,
Okay.
you're getting your own vault using an MPC architecture. And three, you can still borrow and do other things. And you have 24/7 access to move the crypto out if it's not been deployed in a loan.
Can you talk about the security from a user, right?
Yeah.
So
Yeah.
what is their level of security,
Yeah,
right?
it's an MPC architecture.
Right.
And you're basically giving us as a fiduciary the ability, using the MPC wallet, to execute a transaction on your behalf. But we can't do it unless you've initiated something.
Right.
Right? You have to initiate the transaction. And so there's no commingling when you're just doing custody. It's just your vault. All right?
It's
And you
your
can actually
vault, but
verify that on chain. You can actually verify on chain that the assets are there in your vault.
but you have so you're using sort of like an Authy type signature, or is
It's
it
an
really
MPC architecture. If you're not familiar with it, you can
No,
just,
I am.
yeah,
Yeah.
these are
So
your users. I'm talking to
yeah,
the viewers. You
right.
can just
Yep.
do an OpenAI search on explain how an MPC architecture works, and you'll get a few paragraphs, and you basically take the tenets of multi-sig
Right.
and separate out the idea that it's a Bitcoin key. It could be any
Right.
piece of
Right.
information.
Yep.
And now you can basically do multi-party computation to shard the information and protect the information that you're holding, which in this case is your Bitcoin keys.
What other than Bitcoin do your users tend to hold? Is it stable coins?
Some stables, so they're earning yield on stables, which is really
Okay.
interesting. Some do it because they want to use this as their cash account, and some do it because they're dollar cost averaging, or they want to look for a pullback on an entry or something like that.
Hmm.
And then we have some people holding some Ethereum and Solana. That's probably historically 15% of the
Okay.
holdings. Now, there is one interesting aspect to the SMA
Oh, that's
uh,
interesting.
for the proof of stake users out there. And
Okay.
that is staking is considered now in like 20 states in the US a security offering. And if you're in California, I don't know what state you're in. I think you're in California.
California.
I
Yeah.
think I think we're actually pretty close to each other. I'm in Los Gatos. So
Yeah.
if you try to stake your Ethereum on Coinbase in California, you're going to get an error message that staking isn't allowed in California because
Hmm.
Coinbase is currently suing the states, and they're suing
Right.
Coinbase or something like that to fight it out as to whether or not this is a security offering. Abra
Mhm.
settled that out with the same states a while ago and has now basically registered with the SEC as an RIA, which is allowing us to stake. So to my knowledge,
In California.
everywhere in the US. So
Okay.
to my knowledge, we're the only company in the United States that can
Right.
provide staking services through this SMA model in all 50 states.
What about, the lending side? So Ethereum, you can stake, you can earn yield directly on Ethereum, but you provide yield on Bitcoin, right?
Yes. Yep.
How does that work?
Sure.
Where's that yield
So
come from?
I'll tell you how it works today, and I'll tell you how it's going to work in a year.
Great.
So today, the only way to there's two ways to earn yield on Ethereum. One is to lend it out. We don't do that. We used to do that with our retail model, and given how this space has transpired, it's just too risky. Even with over collateralization, it's too risky in my opinion. And so now we only use DeFi, and the way it works is your physical Bitcoin stays with BitGo. It gets wrapped using an ERC20 token, then it gets deployed into myriad contracts. And we basically have a team that does nothing but test those contracts and make recommendations on where the opportunities are, et cetera, et cetera. And we're very good at that. And if you go back to my favorite example is when Celsius filed bankruptcy, they had all these loans outstanding and no one was getting paid back, with one exception. They had a DeFi. They had it right, exactly. They had a DeFi loan outstanding, and the court said, "Why are you paying back this loan?" And they said, "If we don't, we're going to get liquidated, and we can't stop it."
Right.
And they paid it back, and everybody realized, hey, these DeFi loans really do work correctly, because even the bankruptcy court couldn't stop them from paying back the loan. And so now, in a year, my prediction is that we'll see the TVL, total value locked, on Bitcoin native DeFi skyrocket. Okay.
For sure, 100%.
Yeah. So I'm a huge believer in this. Dan Held, who's been a 10-year friend in the crypto world, and he and I have talked about this many times. He's really out there evangelizing this, and I'm super bullish on it. And shout out to Dan and Stacks and there's the DeFi and Bitcoin project and other projects. We've actually, through our VC arm.
Are you an LP in his fund, by the way?
No, we have our own angel fund that does early stage inside of Abra. And we've invested in a couple of projects in this area, and we'll have more to say on it soon.
The DeFi on Bitcoin, DeFi, and just DeFi on traditional DeFi. A lot of people who are listening probably don't understand what wrap Bitcoin is or have a bad idea. Can you just give an overview of what WBTC is?
It's very simple. The Bitcoin stays with the custodian, in this case, BitGo. You get an ERC20 equivalent. It's like a stable coin. It's a stable coin for Bitcoin. Right. With dollars, the dollar stable coin, the dollars stay with BlackRock or Treasury or wherever Tether decides to leave them, and they earn interest, which is why they're the most profitable company in history. And with Bitcoin, it simply stays with BitGo, and you get the stable coin on the Bitcoin as opposed to dollars. And ERC20 is simply the smart contract format that is the standard for being able to have fungible tokens, such as stable coins, be able to transact on Ethereum or Solana networks.
And I just would like to point out for everybody who's listening, and we got 1,500 people listening now, but these are deep markets, right? So I'm not exactly sure what the number is right now, but I want to say there's maybe $10 billion of wrapped Bitcoin on Ethereum, and there's a substantial amount on Polygon, and just held by BitGo, right? And then the Aave offers, it's a multi-billion-dollar DeFi market, buying and lending, borrowing and lending on wrapped Bitcoin, right? So
it's very liquid, very liquid. The way to think about it for people who don't understand the nuances of this, think about it like a marketplace that you can't shut off, right? You have, in a traditional marketplace, you have buyers and sellers, right? And when there's an imbalance, the price goes up or down to create a balance if you have a liquid marketplace. In the case of DeFi, you have three things going on. You have traders, one, and then you have borrowers and lenders, right? Two and three. And the borrowers and lenders always have a mismatch, just like futures markets, like a BitMEX or historically had a mismatch, and then you would have a futures premium or discount. And that balances out the marketplace between borrowers and lenders. And that mismatch is what creates the yield effectively. Now, the beauty of this is you can't have the rehypothecation shenanigans that happens in the traditional physical lending world, because people really don't, it's all a big black hole, the traditional lending world. Whereas here, everything's on chain and you can see it, and there is no rehypothecation in the system. Everything is over collateralized.
Okay, so you're new. So this is I didn't quite realize you had completely pivoted Abra to this new model.
Yep.
So is this new model open only to accredited
Nope.
investors?
Nope.
Ah,
Right now, we can take anyone through the
okay.
RIA. You simply, just send an email to globalsales@abra.com, and they'll send you the onboarding forms. Now, we've been focused on people who are making larger deposits because
Hmm.
it's not an automated sales process today, like where you just download an app and we will get there. It'll be
Okay.
like that in probably 90 days.
Okay.
But because we're high touch on the sales process right now, we are focusing on people with larger deposits. It's just common sense.
Right.
But our goal is eventually to support anyone.
Right.
And but you are onboarding with a new type of registered investment advisor. You can
Okay.
actually see our submission to the SEC. You can look at the it's called an ADV in the wealth management world. Those of you who work with the wealth advisor know what an ADV is. It's the form that you file with the SEC that basically explains what services you offer, the risk disclosures, and it's all public. You can go read it.
And this is fairly unique, though, right?
Harry, I don't know anyone else who's accomplished this.
Right. That's kind of was your news, and I just want
Yeah,
to stress that
yeah.
because there are people who kind of like, I mean, we're obviously both very familiar with Swan and what they do,
Sure.
and Unchained and these things. This is different than that, right?
Very, very.
How is this different from Unchained and
Okay, so my
Unchained,
understanding,
Casa, and Swan? Let's just take those
yeah.
three.
So Casa is the one I understand. I think the best, and that's a
Okay.
multi-sig wallet for
Okay.
Bitcoin, which I think is very cool. I'm a big fan of Swan and the over.
Yeah.
I know multi-sig well, and we used
Right.
to actually run a multi-sig wallet for Abra in our old money transfer days, and
Right.
always been a fan of Casa. And if that model works for you and you're not looking for the services Abra provides, I can wholeheartedly recommend the Casa model.
Right.
I'm not 100% up to date on what Swan and River are doing, but the last I checked, you were actually if they're holding the Bitcoin, you are a liability on someone's balance sheet,
Okay.
whether it's a trust or a third party or someone.
Okay.
And Abra is not doing that. With Abra, you get your own vault, which is somewhat closer to the Casa model. It just uses an MPC architecture as opposed to
Right.
a multi-sig architecture.
Right.
The MPC architecture for us is way better because it allows us to hold other things besides just Bitcoin,
Right.
and also execute transactions as a fiduciary on your behalf when you tell us that you want to borrow, for example.
And but you can also liquidate people too. You do
We
have.
don't. We don't. We're not the counterparty. The DeFi
Ah,
network liquidates you, right?
I see.
So the counterparty to the loan is the DeFi network. Abra does not liquidate anyone. We
I
are
see.
not a counterparty to
Ah,
any transaction in our
I see.
system anymore.
I see. So you've kind of outsourced that in a way, sort of. It's
To the
all
internet,
that.
we've
Yeah.
outsourced it to the internet. Exactly.
Okay. Okay.
Yep.
So there's no just in the same way that Casa, I'm a Casa client, and I also have looked very deeply into Unchained, and they're very good.
Yeah.
Very much a similar product, maybe different user
Yep.
interface, but it's
Yep.
the same. It's just, I mean, I'd say it's the same product as
Yeah.
Casa.
There's
Basically.
something to be said for focus. I
Yeah.
think what Casa's done, what Unchained has done, I think now
Yeah.
what Abra has done are best in class, best of breed
Okay.
services that have different niches, right? Abra's niche is the wealth management space. People want to borrow, they want to earn yield. They may have a small amount of other holdings besides Bitcoin.
Hmm.
They're higher net worth investors, and they're used to working with an advisor. That's the Abra model. I think like I said, what Casa and Unchained is doing for a certain niches
Okay.
makes a lot of sense. And I can't speak as well to the other
Yeah.
providers.
Okay.
I'm a little less bullish on services where a client is a liability on someone's balance sheet now. Just given
Right.
what we've gone through in the last few years, I didn't want Abra to be the last man standing. I wanted us to be in a situation where the rising tide was raising all boats. That's not how it played out.
Yeah, you literally were the last man. I
It's
mean,
unbelievable.
I mean, I can't believe Alex and everybody else.
The shenanigans. Look, I don't
Uh,
need any sympathy or empathy for the pain, and I won't bore your audience with
okay.
what I've gone through in the last 18 months, both from a legal perspective and having to cut back expenses. And we're here, we're growing.
Okay.
I'm excited,
Great.
but
So people want to
it
find out
was
about
not
it.
fun.
people who want to find out about it and follow you,
Yep.
where do they go?
Yeah,
Abra.com.
Bill Bar X, which is I think you can see on the screen my
Okay.
handle there.
Yeah.
On Twitter, Bill Bar, on Instagram. Just I post stuff on both places on occasion.
Okay.
Abra Global on Twitter. We're posting pretty actively. If you want to register, you can just go to abra.com and fill in the form, and the team will get back to you within minutes. And we'll get you set up with your own vault, and you can start depositing your Bitcoin.
Great. Well, thanks, Bill, for sharing. I know you're pressed on time, but I think people should definitely check this out.
Yeah, and I'd be happy to come back and as
Yeah,
people
perfect.
they have more questions.
Yeah, and I just love to hear your take on Bitcoin too, and you've been in it so long, and I think like me, you kind of you're a true believer in this stuff. So
100%.
thanks, Bill. Thanks
My
for stopping
pleasure,
by.
Fred. Let's do another
Okay,
session. We'll dig in on Bitcoin.
see you. Okay, bye.
Bye.